This hour, prices of crude oil will end this year at about $100 per barrel. That's according to a new World Bank report on global commodity outlook, of which we have more in this report.
World Bank in their report noted that prices averaging at around $100 a barrel will still be the highest since 2013. If the report is anything to go by, then we can say that prices at the global level could reduce marginally or go up again in the coming months, or let's say remain stable at the current levels. This is because crude oil is currently trading at $104 a barrel. This may rule out expectations by consumers that prices could be declining on the global market, let's say if the war in Ukraine should end today. It could also mean that consumers should brace themselves for continuous hikes in prices of petroleum products at the pumps locally. Joy Business is even learning that fuel prices could be going up again at the pumps from the next pricing window, which starts from May 1 this year. The World Bank in their report is also warning that the current hikes in prices of food and energy-related commodities are not likely to end this year, but in 2024. The development could mean that consumers should brace themselves for more hikes in food and petroleum prices at the pumps. The World Bank is even worried about how the development could badly affect a lot of economies around the world, especially the fragile and the low middle-income countries that are already going through some challenges.
Well, joining us to discuss is petroleum specialist Dr. Yusuf Suleiman. Thankfully, he has been able to step aside from his normal duty to address this issue. We're grateful that he could join us. What do you make of this outlook projecting $100 per barrel of crude oil prices?
Other nations also face a constant threat of a stop in...
Can you hear me, please?
You're loud and clear. And of course, even as you're trying to, rematch the connection, I want to find out from you what you make of the World Bank's projection of $100 per barrel of crude oil price by the end of this year.
Yeah, so that is expected, Charles, and that is a certainty. It's been long coming. Just that we fail to see that. Pandit would have seen that. I mean, even minus the Russian crisis, if you observe what had happened, to the market, there have been what we call capital discipline. And so, for the fact that oil prices were gravitating towards this three-digit figure of 100 and above, wasn't surprising. What really happened is that three factors were accountable for, this bullish trajectory. One was the OPEC cuts. The other one was this opening of the economies, and then the vibrancy also in the Chinese economies. These were the things that were driving, demand. So one would have been expecting that supply should have been ramped up to match up with the demand, but that never happened because OPEC were still lackadaisic and they were not willing to release any barrels into the market. So this price hike that we are seeing actually is more. It has more to do with supply cuts, that is demand deficit. A supply cut, then, a demand increase. When demand increases, we could get price hikes. When supply is also short, we could get price hike. But this price hike we are seeing is more. It has more to do with supply deficit, as against, increase in demand, So, and that is not good. So if you look at, the aggregate of factors that is keeping the price as it is, one can only say that as a pundit, that the World Bank projection is something to go by. Because the bullish momentum or the sentiment that we talked about that I just enumerated, they look far more potent than potential bearish sentiment. The bearish sentiment are those that could dip the oil prices. So what are they? Quickly, if Iran nuclear deal could come to play, if OPEC could agree to release barrels into the market, these are the bearish sentiment that could potentially dip the oil market. But if you look at this particular sentiment, they are not anything to match with this bullish momentum. So one could only say that, this World Bank projection is something that is inevitable and it's something that could come to pass. For Russian crisis, it's only coming to increase and just to exacerbate the situation, okay? So yes, the main thing is the capital discipline. We have to increase investment into the world of hydrocarbon. As long as there is this continuous capital discipline, in the world of hydrocarbon, where investment is not going into investing into drilling more oil, churning out more barrels to the market, and we continue to have this supply deficit. I think the 3-degree projection is something that is coming to stay.
Indeed, and as you rightly stated, I mean, this is a World Bank projection, which is, likely to happen. But in your submission, you've made mention of ifs, of course, which, proves the point that all these are based on, uncertainties. Let's now trickle down from the geopolitical side that you have rightly, explained to us, to the local development, things happening home. How is this really going to impact prices at the pumps?
Yeah, so that's a good one. As much as this, this happenings or dynamics or incidents that are happening within the international front, as remote as they are, they have cascading impact on our local pumps. 3 things, as I always mention, will impact what the consumer pays at the pump. One will be the exchange rate. Okay, the other one will be the prevailing crude oil prices that we have in the international market. And then the other one will also be the taxes. Of course, taxes are something that we are not able to do anything substantial about. Exchange rate is not the best form, but the other one, which is the wild variable we are talking about here, where this geopolitical, sentiments run in, is the crude oil prices. Right, the crude oil prices directly feeds on what the consumer pays at the pump, because whatever the finished products that the consumer buys at the pump, the petrol, the diesel, the LPG, they are all derivatives to raw material. I mean, they are all derived from crude oil. So as long as crude oil prices are going up, I think consumer is going to pay much at the pump. However, I think there are certain things that we can do locally, at least, to be able to, cushion us so that we are not impacted drastically when this international dynamic falls. One of them, of course, we should make concerted effort to source some of these products locally, as in having a local-based refinery. That will help a lot, And then also another thing is to also rebuild our storage capability like BUST. These are local mechanisms that we can put in place. It's not that good with deep oil prices. They'll never be able to drop oil prices in the international market, but they could shield you as a nation. Every nation has to look inward to look at its own strategic advantages that can shield that particular nation when this particular thing unfolds. And yes, Charles, we're going to live in rough times. The volatility is going to continue because the uncertainties are rising. And then the Ukraine crisis is only adding to the uncertainties. And so we need to look inward and develop our local strategies to be able to withstand these international dynamics, especially when they unfold.
And even as we establish buffers to, cushion ourselves against what's happening around us, definitely it's going to have an impact on inflation. The World Bank is predicting that inflation is going to skyrocket till the end of 2024. That's about 3 years from now. What trickle-down effects can this have, not just on the upstream sector, but on the downstream sector as well?
Yes. So that's a fact. What is inflation? If cost of goods and services skyrockets, it directly feeds into inflation figures. And so, yes, when crude oil prices go up, what will happen is that the consumer will likely pay much at the pump. And that's what is happening. So inflation is already being impacted because cost of energy is becoming very expensive. And energy lubricates the economy. Energy lubricates every movement of the economy. Talk of transportation, movement. Talk of a kinky seller taking taking kinky to market to sell. Everything that moves is moving by energy. And as long as crude oil prices continue to have this upward trajectory, we're going to have we're going to have high energy prices. So once we have energy prices, what will happen is that automatically consumers are going to pay much at the pump. And one consumer pays much at the pump, there will be cascading impact on goods and services transportation, and that will impact inflation, of course.
Dr. Yusuf Suleiman, we're grateful for your submission. And of course, it's a petroleum specialist helping us appreciate development on the global scale in terms of crude oil prices. The World Bank projected $100 per barrel by the end of this year. And he's been explaining to us what this means when it comes to access to fuel at our various pumps.